Seeds of Wisdom RV and Economic Updates Tuesday afternoon, the 12th of November 24. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Good afternoon. Dinar recaps. AFME proposes MiCA-like regulations for tokenization to address CSDR issues with DLT. Last week, the Association for Financial Markets in Europe, AFME, outlined its European vision and policy recommendations for DLT and tokenization. This is in response to a call for submissions by the EU's Capital Markets Directorate, FISMA. The paper makes recommendations that address some key issues holding up the development of tokenization in the European Union. One of the critical suggestions relates to CSDR, the regulations that govern central securities depositories, CSDs. Today, CSDs perform critical functions including securities issuance, acting as record keepers and providing settlement infrastructures. However, a DLT can provide the record-keeping function. Smart contracts can perform functions such as paying interest or dividends. Plus, DLT supports delivery versus payment, which can eliminate settlement risks without the need for a centralized counterparty, CCP. CSDR is incompatible with DLT, tokenization? Countries such as Germany, Luxembourg and Italy have passed DLT-friendly laws. We frequently report on issuances under Germany's Electronic Securities Law, EWPG, where securities issued via a decentralized registry don't require the use of a CSD. Instead, a registrar ensures the DLT is keeping tabs and other related tasks. It's significantly less arduous to become a registrar versus a CSD. That's because the registrar only performs one aspect of a CSD's role under CSDR. However, you won't see any EWPG securities publicly traded. Why? Because the CSDR regulation requires publicly traded securities to be registered with a CSD. So while you can issue securities under EWPG, they can only be traded over the counter, OTC. This is why the digital asset-savvy Börse Stuttgart, Germany's second-largest stock exchange, is setting up a digital securities exchange, BX Digital, in Switzerland rather than Germany. AFME makes precisely this argument, that the EU will lose its current advantage in tokenization to other jurisdictions if it doesn't evolve quickly. A related point is that the CSDR treats CSDs as a monolith. By contrast, IOSCO CPMI Principles for Financial Market Infrastructure, PFMI, outline separate functions. These include a CSD, Issuance and Maintenance, Securities Settlement System, SSS, and notary functions. Hence, AFME argues that because roles are separated with DLT, the CSDR as it stands cannot work for tokenization. It believes there's a need for a new regulatory regime, much like MiCA for crypto assets. However, these two changes are amongst the medium-term strategies, because even if regulators start now, a new legal regime isn't likely to come into force before 2029. DLT pilot regime suggestions. AFME also made shorter-term recommendations regarding the DLT pilot regime, many of which it has previously outlined. The pilot regime came into force in March 2023, relaxing certain requirements, but only one entity has been approved so far. Under the regime, it's possible to operate a combined trading and settlement system. Plus, an exchange can deal directly with retail clients rather than requiring brokers as intermediaries. Currently, the DLT pilot regime supports three types of authorizations: as a multilateral trading facility, DLT-MTF, as a settlement system, DLT sulfur monosulfide, or both, DLT-TSS. However, any entity that wants to provide a settlement system has to be a CSD. Hence, it's no surprise the only authorized entity so far is Prague CSD approved last month. AFME argues that requiring registration as a CSD is too onerous. Many banks would be interested in providing a DLTSS but not becoming a CSD. The authors also note that the UK's Digital Securities Sandbox doesn't have this requirement. Again, AFME is concerned that the EU could lose out to a competing jurisdiction. The DLT pilot regime has quite low caps on activities, which make it unattractive for larger entities. Hence, AFME requests higher caps. It also wants securities issued under the regime to be eligible as central bank collateral. The big picture vision. The report starts off by building a vision of a tokenized future and identifies several key benefits. There's considerable soul-searching in Europe about how to keep innovation within the EU, rather than startups emigrating to the United States. A key part of that is funding, and AFME argues that by using DLT to create a capital markets union it will make it easier for startups to raise capital locally. That's one of several potential upsides. The AFME paper is an evolution of previous policy recommendations it outlined earlier this year. Canary Capital applies to launch spot HBAR exchange-traded product. The asset manager has filed with the SEC to list and trade shares of spot Hedera, Solana, and XRP exchange-traded products. Investment firm Canary Capital filed with the United States Securities and Exchange Commission, SEC, to list and trade shares of its spot Hedera exchange-traded fund, or ETF. In a November 12 filing, Canary submitted a Form S-1 registration statement to SEC officials for review, proposing the Commission allow U.S. investors to trade shares of its Canary Hedera ETF trust on an unnamed exchange. The proposed investment vehicle was one of the first to offer investors exposure to a spot HBAR exchange-traded product, though the asset manager has also applied to list and trade spot XRP and Solana ETFs. According to the filing, the investment vehicle will not use HBAR-linked derivatives or futures contracts that could put the asset manager within the purview of the U.S. Commodity Futures Trading Commission. Canary did not name an exchange for a listing nor a custodian or ticker symbol. HBAR, the native crypto asset of the Hedera network, had a market capitalization of more than $2.5 billion at the time of publication. Trading at a price of roughly 7 cents. Canary launched the HBAR Trust on October 1 as a private offering to qualified investors. SEC soon under new leadership? It's unclear whether the Commission will approve listing and trading of spot ETFs tied to other crypto assets on U.S. exchanges following the approval of Bitcoin and Ether ETFs in January and May, respectively. Following a November 5 election in the U.S., Republicans will have control of the legislative and executive branches of government starting in January, with President-elect Donald Trump pledging to fire SEC Chair Gary Gensler. However, despite the criticism by many in the industry over his seeming regulation by enforcement approach to crypto, Gensler also voted for approving spot BTC ETFs. The SEC's Trading and Markets Division signed off on spot Ether ETFs. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: Dinar Recaps.